Hi, it's Larry Gaines from OptionsOnTheOpen.com. We are the leaders in option day trading, and it is our goal to make consistent, impressive returns trading options every day. At Options on the Open, I teach our members how to day trade and swing trade using options, and we use a very disciplined system that I developed for trading. By the way, this system also works great on the outright stocks, but we use options in order to use our capital much more efficiently and to generate much greater returns. One very important indicator that is used in my trading model is the Bollinger Bands. It's just one of a number of indicators used, but it is so powerful if used correctly. As you'll see in the video, it is very simple to use, but one of the best indicators for identifying shifts in price momentum. I use it to help set up entries and exits on all my trades. The Bollinger Band, combined with my other trade indicators, has created a trading system that consistently generates high probability winning trades like no other system I've ever used. And the really exciting part about this system, it works across all time frames and across all trading assets such as stocks, ETFs, commodities, futures, and forex. Now let's get back on track and I'll show you just how we use the Bollinger Band. For those of you that are not familiar with the Bollinger Band, in the simplest of terms, it is an indicator that measures two standard deviations from a set moving average. Most Bollinger Bands use a 20-day or 20-period moving average, but for day trading and swing trades, I use a 12-period moving average. We can use the Bollinger Band as an indicator of short-term market direction as well as intermediate to long-term market direction. Now let's review some charts to show you how they help our day trades and swing trades. The first chart I'm going to show you is Apache Oil, and this was on February the 18th, 2011. Using our indicators for Apache, based on a breakout momentum indicator that we use, along with the Bollinger Band being part of it, the system would have bought right here at around 1010 at about 120.17. As you can see, it broke above the Bollinger Band, and this is what is so great about a Bollinger Band. Once you break and you break out with the momentum, as long as it hugs the Bollinger Band, we stay with the trade. And this is a 1-minute chart, so you can see that each bar here is 1 minute. So this starts hugging the Bollinger Band on a 1-minute bar chart, and it just stays with it all the way up here to where it pulls away from the Bollinger Band. That's a sign of losing momentum, and that came at about 120.95 or 121. So this was a dollar move, and this took place in about 8 or 9 minutes. But the point of this chart is to show you that price momentum, as long as you're hugging the Bollinger Band, it gives you a great indicator to stay with the trade. Now this is on a 1 minute. The next chart I'll show you is a 5 minute. This is Apple, and this is using a 5 minute chart. Our indicators of our trading model gave us a short right here at approximately 9 o'clock, and this was on February 18th, and this was on Apple, and it came in around 157.70. So the market broke down for Apple, and it had a great momentum to the downside, and you measure this momentum based on the Bollinger Band. It stayed with the Bollinger Band, hugged the Bollinger Band, continued down, and didn't move away from the Bollinger Band till about right here. So that came in about 354.70, let's say 355. So from 357.70 to 354.70, that's a $3 move, and this took about 8:55, 9 o'clock. That was about 1 hour. So you can see this was a sustained move over a 1 hour period, and by following the 5-minute Bollinger Band, you could have stayed in this trade as long as it stayed with the Bollinger Band, exiting as soon as it pulls away. That's a sign of shift in momentum. It did continue down, but it pulled away again, then went back up. So this is an example of using the 5-minute chart. Now we'll go to a 60-minute chart and show you that. This is the chart of the April crude futures contract for WTI, the NYMEX contract for WTI. And this was taken today, February 21st. Based on our model of indicators, which the Bollinger Band is one, the trade would have been put on here, a breakout, another momentum breakout trade. And this came over last night in the overnight session on the 20th of February. But as you can see, using the Bollinger Band on the 60-minute time frame, these are 60-minute periods here, you would have stayed with this trade using the Bollinger Band moving average as your trailing stop. So as long as you didn't break below the moving average, you would stay with the trade. And this trade entered right about here at 90.74, and it's currently still in the long position right here at 95.39. And this is today at about 12 o'clock Central Time. So this particular indicator is just one great example of how to use indicators, the Bollinger Band indicator, across different time frames and different assets. Now remember, this is just one ingredient in our trading model, but when combined with the others, we have a system that generates a very high winning percentage of trades. If you'd like to learn more about how you too can make great profits from day trading options and swing trading options, come join me at optionsontheopen.com. That's optionsontheopen.com, and thank you for your time.